The crisis that wasn't. That basically sums up the year in municipal bonds. Meredith Whitney, just one of the big names that predicted hundreds of billions of dollars in default. But that number ended up being less than $3 billion. So if you owned munis, chances are you made money this year. With a little more on the contrarian bet that paid off, we bring in our senior markets correspondent, Julie Hyman. So Julie, remind us, I guess make the people who do own munis feel extra special. How much did they outperform compared to other forms of debt this year?
Well, they returned about 11%, a little better than 11%. So that's better than stocks. It's better even than treasuries in some cases. So definitely munis did not see the kind of Armageddon that Whitney predicted back on December 19th, 2010. In fact, if you were an investor in the municipal bond market, when she was saying avoid munis, if you said, I want munis, and you bought them the day after on December 20th, 2010, you would have gotten about an 11% return on your investment. So let's say you put in 10 grand, you've got back then $11,106. Not too shabby, especially considering the year that we have had in other types of assets. And just for perspective's sake, I talked to a lot of folks in the municipal market at the time, and I didn't talk to one person. It was very difficult to find anybody who could agree with that hundreds of billions of dollars in default. So Whitney was definitely a very loud voice, a prominent voice, but she was one that many folks who have been in the municipal bond market for years did not agree with. So that's something that is worth pointing out. Now the question is what happens going into next year. And now it looks like that what we might see is a migration a little bit away from safety, the higher rated municipal bonds, and perhaps into some of the lower rated bonds as folks get even more comfortable once we get past that hurdle of not seeing the huge wave of defaults that was predicted. So basically what you've seen already is a narrowing in yield between the higher rated securities and the BBB rated securities in the municipal bond market. And some fund managers are saying you will continue to see that type of narrowing as people buy the higher yielding debt and the yield then comes down and you start to see those spreads tighten a little bit. Deirdre, I know you're going to talk a little bit more about what's to come in the municipal bond market, but it is remarkable in 2011 more for what did not happen than what did happen in munis.
Julie, thanks so much. Our senior markets correspondent, Julie Hyman, just telling us their munis outperformed all other bonds this year, even treasuries. Our next guest is one of the best. He runs a $5 billion Legg Mason Western Asset Management managed munis fund. It outpaced 99% of its peers over the past 5 years, and in fact, this year alone, up around 12.5%. Robert Amodeo is with us here. He is, as we just mentioned, head of that Muni division. Robert, thanks so much for joining us. We just heard from Julie there talking about the fact that munis, despite all the big voices saying otherwise, outperformed even treasuries this year. Will 2012 be the same?
Yeah, we have a positive outlook for 2012. Certainly, I think it'd be difficult to match the gains we saw during 2011. But we're heading into the new calendar year in pretty good shape. Fundamentals continue to improve. Tax receipts coming in a little bit stronger, albeit property taxes are slipping a little bit. Valuations are still attractive. If you move into the revenue bonds, as you heard just moments ago, there's some good value in those sectors. Healthcare, transportation, single A in particular, triple B. You don't really have to dig too deep into the credit spectrum profile to find good value.
Obviously, you were not surprised by the fact because you were positioned correctly, but some of the things that Julie talked about or alluded to in Meredith Whitney's predictions, meaning, and you just said, the falling tax revenues, the rising pension obligations, the government's inability, at least at a federal level, to meet demands, and many people thought that would happen at a local level for many places as well, did not happen. And you're saying it's not going to happen next year either.
Well, a few things happened. One, the economy began to grow. And tax receipts began to come in a little bit stronger than anticipated. On top of that, there were real cuts in spending. In addition to that, there was some municipal authorities actually addressed those structural imbalances from the asset liability perspective, albeit on the backs of the public employees through less benefits, possibly less pay, or even furloughs. It was a challenging environment for public employees, but for the municipal authorities, they did, in fact, right the ship. Now, there's more wood to chop. Certainly, they're vulnerable to a downturn in the economy, but if the economy continues to grow, even at a sluggish pace, they're in good shape.
And we can't count on having the same surprise factor, right? If you own munis now, you're not going to get the same bump up surprise that you did this year, in the sense that munis as a group really took a hit at the beginning of this year. Did you question your own position?
Oh, absolutely. Our firm's view was modest growth, modest inflation. And within that, we looked at the slope of the curve. We looked at different sectors. We looked at credit quality. We didn't want to dig too deep into the credit quality. That's why we stayed with single A. The yield curve being steep, we took advantage of that. That's why we went out to the long end of the curve. And then certain sectors, just when you look at some well-managed authorities or well-managed organizations, the valuations just didn't match the price. And so based on the price being too low, in our opinion, given our economic outlook, we took advantage of that, and it worked for our investors.
Is there any particular spot on the map that you see opportunity? We spoke a lot here at Bloomberg about California, and we put a lot of attention there, and it seems like that was one example of the less than dire scenario. Do you see any places like that now ahead of the new year?
In general, if you're an intermediate or a long duration investor, we like that 10 to 30 year area of the curve. We're still focused on that single A and triple B type credit within transportation, healthcare, some other revenue projects. Our portfolios today are mostly void of general obligation debt. It's not to say that we're predicting defaults or we agree with that position. We just think there's a better entry point ahead. And if the entry point does surface, we'll take advantage of that.
Do you think Meredith Whitney should come out? I mean, Bill Gross had to very publicly change his stance on treasuries, what he said about treasuries. We know Meredith Whitney kind of went down that road, but not quite. Do you have any opinion on how these big voices should be seen in the media?
As an investor, take a step back. Really try to understand what you own. If someone's predicting, for example, property tax receipts are coming down now, so someone's going to predict there's going to be stress at the local government level. Yeah, that's true, but that's not true for every local government. There's some very well-run local governments that are supported by broad or diverse revenue streams and an employment base that's stable. So to come out and just announce a grand statement in a marketplace that's heterogeneous, I think is misleading.
I want to ask you one last question here, Robert, before we go. What is the one thing, because I'm sure you challenge yourself on a daily basis, if you're wrong, what is it about?
If the sluggish economic growth turns negative. And so what does that mean? You need further cuts in spending. There's been lots of cuts of spending to date. Considerable hundreds of billions of dollars have been cut from budgets. Looking ahead, programs with true merit would have to be cut. And that's going to be difficult from a political will perspective.
Okay, Robert, especially in election year, right?
Yes, absolutely.
Thank you very much for your time.
My
Congratulations
pleasure.
on the great 5-year performance this year, nonetheless. Robert Amodeo joining us there, portfolio manager and head of munis at Western Asset Management.